Thank you all for joining us today. We've got a great presentation planned with four of our staff that know kind of what they're doing in this outsourcing. The benefits of outsourcing for your dental practice is what we have got lined up for you today. We've got with us Jenny Hattori. She's a partner. She's in our business outsourcing and strategy. We call it BOSS for short. And we've got Lori Dahlberg with us as well. She's our human resource consulting. We've got Anders Eriksson. He is a risk advisor in cybersecurity. And we've also got Kristen Taff, and she's with our valuation litigation services. And like Amy said, we're going to wait for questions towards the end, but if you have them, please give them to us, and we'll go ahead and turn our time over to Jenny.
All right, Jenny, if you click on the screen here, you will have control.
I've got it. Thank you, Amy, and thank you for the intro, Shane. Hello, everyone. Thanks for joining us today. I'm going to hit on some of the key benefits to outsourcing that accounting, a lot of that back office function of the dental practices. And as we go through these, you'll see while they apply very much to the practices, they're not necessarily unique to the industry. A lot of these apply to all of our client base.
Click on the screen.
Yep. And our message today is going to be centered around a couple of different benefits in two areas: the human capital or the people side of those benefits, whether it's the practitioner, the owner of the practice, or the other employees within it. But what are the benefits for those within? And then the other piece, the financial results. How is that area benefited from outsourcing within your practice? So starting with the human capital, those people reasons to outsource. And there's a variety of different reasons, and many of us have seen them play out on a day-to-day basis. We all know the impacts of turnover in training, the challenges of the different generations within the workplace. I think there's people challenges on a day-to-day basis regardless of where you work, what you own, what you do for a living. But some of the benefits of outsourcing that can help to offset some of the time invested, some of the frustrations and challenges. One is just within the consistency. There's just less to worry about when you're outsourcing and really turning that over to a group of professionals. The employee turnover, I think we'll have some statistics later, but within the industry, it can be as high as 25% of turnover within roles in a practice. And that turnover can be an incredible burden depending on the time of year or the fluctuation of busyness and the impact of those roles. It can really impact the day-to-day operations of a practice for a couple of reasons, whether it's just someone picking up those work and trying to control the ebb and flow of their responsibilities, understanding the priorities of their responsibilities, the person who left, to make sure that everything is handled. In this case, bills are paid, credits are given, orders are made, whatever those duties were that are really impactful on the day-to-day operations of your practice. When someone turns over and leaves and you're having to absorb that, that can be a real impact, a real burden to the practice and those who are ultimately responsible. But then you'd get someone else new in, and there'd be that internal training time. So who takes the time to get someone up to speed, and how was their job duties, their responsibilities impacted by dedicating that time to that role, by helping them through and getting them up to speed? And oftentimes we find that internal training time is provided by those who really excel within your practice and already carry the lion's share of their responsibility. So finding their time available for that can be a real burden as well. And then there's covering leaves of absence or vacation. So you might not even have turnover, but you have some absences and you have duties that need to be done. And we like to call it the win the lottery, like someone just isn't in tomorrow and you didn't anticipate it. And how are you handling those? And those unplanned absences, unplanned leaves can be incredibly impactful depending on what their duties are. Things need to happen on a day-to-day basis. And how could that be better impacted when you've outsourced and turned that over to a team of professionals who may be able to help or have those responsibilities? Another reason would be on the experience and knowledge. When you work with an outsourced provider, you have an experienced team already trained. And for many of us that learned our roles by working closely with others, you see how much you learn from the day-to-day interactions from those who do what you do and have more experience and continually train. And oftentimes in the accounting function within businesses, there might be only one individual in that role, and they're really limited to what they're able to learn because there's no one else there to learn from, no one to ask questions from. While that learning might happen, it's slower, it's a self-taught, it might be far too many lessons learned the hard way. So there's a lot of knowledge and experience gained from working well with others and having continual access to that training. And the depths of resources within outsourcing can be so much broader than just the knowledge that you've hired for that specific role. And some of the others that will speak after me go to emphasize within some outsourced practices how those other areas of specialties and other knowledge is available for questions, special projects, all those needs that might come up, whether they were planned and foreseen or unexpected and came up that day. But having a wealth of knowledge at your hands can be really positively impactful. Other people reasons to outsource. Overall, just employee satisfaction. For many of us who may have held roles that included job duties that weren't our strengths, weren't necessarily what we went to school for or what we were hoping to pursue, those can be a real burden, a real grind on that day-to-day job satisfaction. So when you outsource, you really do allow those within your practice to focus on what they were hired for, really where they have their strengths, whether it's their unique ability or their highest and best use of their time, and really allow them to excel in those areas. By doing this as well, it'll take some of the peace of mind out. In reading more and more about the industry and working closely with dentists and these practices, we see a trend moving away from dentists leaving school and wanting to own their own practice. For a lot of it might be a lack of confidence of understanding the business behind owning a practice and not wanting to handle what might happen from that lack of understanding, whether not being able to train and oversee your employees, not being able to answer some of those more difficult questions, or feel like you understand what the action plans are to improve financial results. So working with a team of professionals can help take that worry out of that process, and then in turn help you feel more confident in the financial information that's used to make those important business decisions. As a practitioner, you might get your financial results regularly, and hopefully you do. And are you feeling confident with the information that's included, whether it's accurate and you understand it, and operationally how those items are impacting the numbers that are presented on the financial statements? Do they get presented in a way that helps you see them easily and interpret the information? And if not, there might be time invested, maybe lost revenue. I think this is an area where it can be easier to quantify the impact of time not invested in the business on those things that help produce the revenue side. So seeing more patients, performing more procedures, if time is invested on that back office side, something that can be outsourced, is that not just potentially impacting financial results from additional costs, but also foregoing revenue? And how might that time be better invested by a practitioner to better their practice? So tying into the financial results, many within the industry are working with consultants who help give them some valuable financial information aggregated together generally of other practices of their size and industry benchmarks. And what we'll find is oftentimes our clients that we're working with didn't have an understanding of the drivers of those metrics, of those benchmarks, to understand how they would begin to make some incremental changes to positively impact those results. And I think when outsource, you'd work with professionals who help interpret the financial information, whether it's tying together the knowledge of what the financial statements mean, so the profit and loss that you see, those statements, balance sheet, into the metrics that you might be getting from a consultant that you work with, and how do those tie together, and how you could have some assistance in setting goals and measuring those results, creating action plans for improvement that help hold you accountable. In this case, I usually use the example of like the health coach, personal trainer. And so many of us know that you should eat right and exercise regularly, but until you have someone helping hold you accountable, whether it's looking at a food journal or assuring that you are there for your workouts regularly, it might be hard to meet those goals. And I think on the financial side, we have similar goals of wanting to improve results. And someone outsourced who you've had to verbalize your goals to and create an action plan with will also help you hold you accountable for meeting those goals, helping you design the action plan, checking up with you regularly, and improving those financial results. They're also there to help you develop those best practices, offering suggestions, what they've seen within other areas, what might work to help make those improvements for you. Financial results might also be benefited from just scaling up. As businesses grow, practices grow, finding the right number of employees at the right time for what you need is certainly challenging. I don't think we've ever been able to find a fraction of a person. Maybe you can get a part-time employee as you grow and you no longer need one person in a role, but perhaps you need two. But we know that can be challenging to find the right person looking for just a minimal amount of hours or something less than full-time. And one of the benefits to outsourcing is always having that right amount of resources at the right time, regardless of what your size is right now. So it helps for plans for growth or plans of transition, and can really allow you to meet those needs. So you're not overworking some of your best individuals or having someone underutilized for a significant amount of time, but really having the need match up with the resource. And then the depths of resources and specialized knowledge, just deeper knowledge of your business, integrating more services together, and the others that will speak on their areas of expertise will help tie in through, if you'd work with outsource and have all those options at your fingertips, all those resources very familiar with your practice, you could see how the collaboration between all of them would help that understanding of your business and really foresee some opportunities, be in front of some challenges, and help that practice grow. So whether it's planning to buy, sell, or merge, guidance on some critical decisions, resources available for special projects, the challenges that come up in the day-to-day of running a practice are immense and something that comes up on a regular basis. But having resources readily available helps deal with those challenges as they come. And now we're up to our first polling question. So again, as Amy mentioned at the start, for those receiving CPE, we do need you to respond to all of the polling questions in order to receive your CPE. The first one is a true or false. Growth can strain current resources, but timing may not be right to add another employee. Outsourcing allows you to have the right amount of help as you grow. True or false? And we are going to leave that up for a few seconds to give everyone the opportunity to answer.
If you guys do have any troubles answering the polling question, please refer to the Zoom handout that was emailed out yesterday. Chances are your internet browser is not compatible with Zoom. All right, we're going to go ahead and close this poll, and here are the results.
Excellent. 100% yes. True is what we were discussing, allows you to scale the right number at the right time. And as we talked about the different resources available and how they'd impact your practice, transitioning from accounting, human resources is a close tie into the accounting piece. So Lori Dahlberg is going to take over now and go into more about the human resources piece within your practice.
Thanks, Jenny. I appreciate the introduction, and welcome to everyone. I am Lori Dahlberg, and I am the HR Consulting Manager here at Eide Bailey. So I work with clients on HR needs that come up that may be outside the area of their expertise, or if they just don't have any HR resources to handle those types of situations. Today, we're going to be talking about some HR-related statistics, and I'm sure as we share those, you will realize that they are ones that you're feeling on a regular basis as well. We're going to talk about the areas of HR that you can focus your efforts on with regards to your workplace practices that will have the most impact. And then I'll talk about utilizing outsourced HR services. So to start off with some statistics, unemployment is still ridiculously low. It is at 3.6% and has stayed there for quite a while. What that means is that there is only 3.6% of the population that is available to work who actually don't have jobs right now. And for many of the roles that you would have, you're looking for individuals who actually have work experience, and chances are highly likely that those folks aren't even in that 3.6%, because when unemployment goes that low, it traditionally means that those who are unemployed, there's a reason they're unemployed. So that makes it a little bit more difficult for you to find good quality candidates for your positions. The national rate of turnover is 25% right now. And that means that 1 in 4 individuals leave their job. And they're leaving their job to go to other jobs for a variety of different reasons. But what that means is that it is really hard to keep talented individuals as employees within your organization. And there are different things that you can do to help mitigate that. 53% of employees who left their role within a healthcare field actually spent less than 2 years at the facility. So what that means is if you've hired someone, chances are highly likely, more than 50%, that after you've invested all of that time training them, getting them up to speed, and actually benefiting from the services that they're providing, they're going to leave you in 2 years. And that is specific to the healthcare industry. It has a higher rate of turnover than a lot of other industries out there. And currently, there are 88,269 dental-related jobs that are posted on Indeed for professionals who have salaries between $30,000 and $100,000 a year. So there are a lot of opportunities out there for the types of people that you might be looking for to join your practice. They have a large number of options out there, so it makes it a little bit more difficult for folks to bring new people on. And I'm sure that you're feeling this. I'm sure that you've hired someone and thought that they were a great fit, and then they left before you were ready for them to leave. So you're experiencing the turnover, you're experiencing the fact that it's very difficult to find individuals to fill positions. And once you do find folks, it's hard to get them to stay. Those are the topics that we're going to be talking about a little bit more, because these are daunting statistics for individuals like yourselves who all you want to do is to help patients and do no harm, right? You took your creed and you know what it is that you want to do. You want to help people. That's why you went into the dental field. And unfortunately, if you own your own practice, you're stuck with all the business side of things. And that can be really harrowing for someone to consider. And the good news is that a large percentage of the turnover that you're experiencing can be prevented through strong employment practices. And those are the practices that we're going to discuss right now. There are a few different areas within HR, and I'm sorry, it's freezing up on me. There we go. Actually, it needs to go back one. There we go. There are a few different areas that you can focus on that will have a tremendous impact. The first of those is on your recruitment practices. When you need to hire someone, hiring can't just be an afterthought. You need to think of recruitment as an investment in your business, because most businesses will say that employees are their greatest assets. You need to invest the right amount of time in ensuring that you are finding the right people. So having a good recruitment process to make sure that you hire the right people can have a tremendous impact on your business. You also can put in place policies that set expectations for your employees, and then you can enforce those in a consistent manner. And by setting those workplace practices, employees know what their boundaries are, they know how they're supposed to perform and behave in the work environment, and that can certainly cut down on some of the more difficult in-office conflicts that take place. Another thing to focus on is performance management. Everyone wants to know how they're doing in their job. So having a regular structure to your performance management and conducting performance evaluations is one of the key factors in employee retention. And then you want to make sure that you're paying employees a fair wage for the job that they are performing, regularly checking the market to make sure that you are paying what is appropriate for the position that's being performed, the job responsibilities, and the geographic market that you're in. And the final thing that you can do is to focus on employee retention. And if you're doing several of the bullet points above that one, it's definitely going to improve your retention. So when it comes to focusing on employee recruitment, some of the reasons that you would want to outsource that is that we have professionals that are able to work with you on your recruitment in one of two ways. Either find someone who can assist you with developing a recruitment process and tools that allow you to effectively execute your recruitment process to get to those candidates, to bring them in for interviews and handle it in the right manner to ensure that you are hiring the best possible talent to meet your needs. If you don't have a standard recruitment process, you put yourself at risk for discriminatory hiring practices, and you put yourself at risk for not hiring people who can actually do the job that you want them to do. So having that infrastructure of establishing a recruitment process and having the related tools like phone interview notes or interview questions to ask, application forms, interview feedback forms, and things of that nature, if you have those in place, you're far more likely to have a successful recruitment endeavor when you do have positions available. The other option is to utilize an outsourced HR professional to actually hire for you, to follow the different processes, to go out there and recruit the talent, to do the pre-screen, to get them set up for interviews, and to assist you with ensuring that you're asking the right questions to determine if the person is the right fit. So if you don't have the time and resources to invest in doing the actual recruitment, outsourcing that component of the job can really be beneficial as well. When we're talking about putting in place policies, outsourcing this aspect of your business can not only help you stay compliant with current state and federal, and sometimes even city and county laws, but really can help you to outline your practice-specific information regarding your workplace expectations. Things like hours of operation, when you expect people to be there, what you expect them to do if they're not able to come to work, how they're supposed to handle circumstances in the work environment where there might be conflict, who they go to, and what process they need to follow. You also should include in an employee handbook information on paid time off or any benefits that you are providing to your employees. Having that outlined in an employee handbook allows them the opportunity to know what they're getting from you as the employer when it comes to benefits and time away from work. All employee handbooks within states outside of Montana should include the at-will clause, letting an employee know that their employment can be terminated at any time for any reason, with or without notice, and that they can actually end their employment with you at any time for any reason, with or without notice. In Montana, there is a clause that's called the just cause. So in order to terminate someone, there has to be a just cause, and you would want to include that in your handbook in Montana. And then your handbook would want to include things like contact information for who an employee can speak with if situations arise that are making the work environment uncomfortable intolerable or if there are definite policy violations. Now, there are so many different state regulations out there that differ from other states that outsourcing an employee handbook to an HR consultant really allows you the opportunity to feel confident that you have the right rules and regulations in place for your business in your state. These rules and regulations change on an annual basis. We have some states that have paid sick leave, others don't have paid sick leave. Some states require a certain amount of vacation time to be offered. They have different ways of paying overtime. It just varies from state to state, and expecting you to know all these laws and to keep up with them really can be burdensome and very, very risky. So outsourcing the aspect of creating or updating an employee handbook can really have an impact on your business in a positive manner. It prevents risk, and as I mentioned earlier, it also sets up expectations for your employees. Employees want to know what their boundaries are, and so having that employee handbook in place can really help you out in that regard. When it comes to performance management, it's a great idea to outsource performance management to someone who has the expertise in developing performance management processes and tools. And by outsourcing that, we can work with a dental practice provider to figure out what is it that you're trying to evaluate your employees on, what are the key metrics and things that are important to you, soft skills, competencies, things of that nature that allow your employees to be successful in their jobs, which in turn allows your practice to be more successful. And by working with you to identify what those strategic initiatives and competencies are, we can help you to develop a performance management tool so you can actually evaluate your employees on key criteria that make a difference. We also can work with you on establishing a timeline for your performance management process, whether it's you evaluate people every 6 months, you evaluate them at 30 days, at 6 months, and then once every year on their anniversary date. We can help you to identify what would work best for your practice. And as I mentioned earlier, employees want to know how they're doing in their job. So allowing them the opportunity to meet with you or to meet with a supervisor to be evaluated on how they're doing helps them in their career and makes them feel like they are making progress towards something. And today's employee really wants to ensure that they have opportunities for development and advancement, and having a performance management process in place can allow you the opportunity to have those conversations and set the expectations properly. It's also a great tool for mitigating risk when it comes to those employees who aren't performing. This is the avenue that you follow to document poor performance, so that if it does come to a point where you need to terminate someone, you have the ability to do so and don't have the fear that it's a risky decision. Another area to outsource has to do with compensation and making sure that you are paying employees a fair wage. The best way to retain staff is to pay them a fair wage for the job that they're doing so that they feel like they are making a difference and they're being paid properly for it. And outsourcing this area in HR means that we would be able to do some sort of compensation study for you for your specific geographic region, for a company of your size with regards to revenue or number of employees, and specific to the position responsibilities, not necessarily just a job title, but the responsibilities that the employee is performing, in case you do have individuals who wear a number of different hats within your practice. By doing these compensation studies, typically once every 3 years or so, you really have a strong grasp on what the pay range should be for the positions within your practice, and can share that information with your employees and determine where within the pay range you'd like to pay them. And paying someone fairly for the job that they do is a great way to retain staff. when it comes to retention, as I mentioned, if you've done some of the previous items that we've talked about, if you have the performance management process in place, if you have an employee handbook that sets the policies and expectations, and if you are paying individuals fairly for the job that they're doing, you are well on your way to having a work environment that employees will want to be part of, because you're demonstrating that you care about employees and are invested and focused on your employee resources. However, we know that no work environment is perfect. And if you have situations that seem to be more conflict focused in your work environment, maybe people are gossiping or people aren't pulling their weight and other people are talking about it, we can work with you to do what we call an organizational audit, where we come in, we talk with different individuals, ask them all the same questions, and we can pinpoint where some of the risk areas or the areas for improvement exist, so that you can address those issues and get your group back on the path for being efficient and effective and focused on serving the patients that you have coming to your practice. This has proven to be very, very successful with a number of clients that we've worked with in changing the culture of the environment to the exact culture that the dental practice owner had envisioned. Sometimes they have a vision for what they want and it just isn't being carried out, whether it's because you might have one particular employee who's difficult to deal with, or because you don't have processes or practices in place that employees feel are necessary. We can help you to pinpoint those things when you utilize an outsourced HR specialist who has expertise in that area. The other thing you can do is to collaborate with us on establishing your current practices that you have in place. Have us take a look at the benefits that you're offering, the work schedules that you have, the structure of how you are managing your practice. There are a lot of different things that we can do to share best practices. Much like Jenny mentioned on the financial side of things, looking at best practices from what other organizations are doing or other practices are doing, and then bringing those best practices into play for you can help make your work environment one that employees want to be part of. So the goal with HR, really your goal is to focus on your practice and to use your expertise to serve your patients. When you outsource some of your HR services, it allows an HR professional to focus on the HR elements, which frees up your time to actually do what it is that you want to do, which is focus on your practice. So we have our second polling question. And as of April 2019, the unemployment rate was at what number?
All right, that second poll is now open. Just a reminder, if you do have any questions, please use the Q&A box located on your menu bar, or you can use the chat feature. Okay, we're going to go ahead and close this poll here and hear the results.
Okay, so the answer with regards to the unemployment rate as of April 2019, the answer is A. It is 3.6%, which is pretty darn low, as we mentioned, and is causing a lot of grief for employers like yourselves with regards to finding talented individuals. So hopefully some of the practices that you are able to outsource to a human resources consultant will help you to alleviate issues so that you don't have to go out there and find folks at a time when unemployment is so low. So our next presenter is going to be talking with you about cybersecurity. So I would like to welcome Anders Eriksson.
Hello, everybody. How's it going? I'm really excited for the opportunity to be here. Let me see. I've got to click on this to get that to take over here, Amy.
Yes.
Let's see. All right. Well, I appreciate the opportunity to meet with you today and talk about this important topic. It is very timely as far as cybersecurity is concerned. We've seen a lot of, and you've probably seen a lot of the articles in the news and the announcements about security breaches. A lot of these security breaches that reach the news are for large organizations. You've got large health systems, you've got the Targets and the Home Depots and the Anthems of the world that have all been running in and having run-ins with cybersecurity breaches or with breaches of privacy data and HIPAA data. But what often doesn't get to the news is the impact that these types of breaches have on small to mid-sized organizations. Even dental practices are falling victim to a lot of the security breaches we see, and they don't hit the news, but they're out there and they're impacting a lot of these small organizations. And as we look at the research that has been done around cybersecurity and where the threats are in the future, we see that the threat actors are moving down market. There is more risk to smaller organizations, and we see that the impact of breaches is starting to reach some of these small organizations in the way of fines, in the way of some legal action. And so this is an area that, when I say it's timely, it's important for all organizations to consider their practices when it comes to cybersecurity and just security in general. To get started here, let's see if I can click on this. There we go. So I want to just bring up a couple different headlines. These are things, if we go out and look at breaches with regard to dental practices, here's a couple that really came alive to us. The first one there is that there's a receptionist in New York dental practice that was sentenced to jail for disclosing HIPAA data. So we've gotten past the point of fine. We've gotten to some activities that were pretty egregious, and the impact of those is now affecting people's lives, not just the practice, but the individuals who were involved. The point of jail time is actually being passed down as a sentence. The second one there, an Indiana dentist pays $12,000 fine after 60 boxes of patient files are dumped. You know, the fines are calculated on the number, oftentimes are calculated on the number of records that were disclosed. And so you think about the extent of records that your organization is taking in, your practice is taking in, and what will be the impact if some of that information was released, and how easy it is nowadays to take a bunch of information, it's all digital, and put it on a thumb drive. That thumb drive gets lost, and all of a sudden you've got a data breach, and the impact of the fines of that could be substantial. It's not just fines, it's notifications. It's actually having to notify all your impacted patients that their data might have gotten lost. This doesn't even have to be a breach of, hey, we know someone stole it. If you just can't account for it, it can result as a data breach and have a pretty significant impact on your organization. The third one there, an Ohio-based dental insurance carrier suffered a data breach due to a compromised employee email account. So it's not just our actions that are taking place, there's actually technical issues that we've got, or the way that we are handling data online that could result in a breach. And the last one there, HIPAA data security breach in Florida, a dental practice, they lost 4,000 patient records. These included names, addresses, medical history, social security numbers, test results. So the impact goes beyond just the impact to you or to the organization that might be breached. You're affecting people's lives because now they're impacted by their social security numbers and privacy data being out there. And we've got some examples of some real awful experiences where people are actually, you get medical records that are leaked, and now you've got that medical records online, and those could be used for potential blackmail or things that people wouldn't want to get out in the public. So just recognizing the value of the data and the importance of the data that you have and you are collecting, and protecting that appropriately is a big step for a lot of organizations that then you start taking. When we talk about some of the causes of these violations, well, unfortunately, some of these causes are sort of deep-rooted into our culture. The things that we do, the way we process data, the way we handle papers that we're taking in, the way we talk to our customers or our clients that are coming in, all those sort of cultural things could leave us open to violations of security. Things like improperly disposing of papers and devices with patient information. So what do we do when we've got a piece of paper we no longer need? How are we making sure that gets destroyed appropriately? Not securing sensitive information being sent via email. So we're sending stuff out and we're not making sure it's secure, and it can get intercepted. Leaving too much patient information in a voicemail. we give these people a call. We say, hey, we've got some information about you. We start talking about some of the things we're seeing, but we don't realize is that might not be the right phone number, or there might be other people living in that house that could be that information could be disclosed to. Not having a right to revoke clause, so making sure we've got the appropriate signed documentation so that people, when we do share information, we know we need to share information with a general practitioner or with somebody else, we've got the appropriate clauses that help us give that information, or gives us legal right to share that information. Employees sharing stories about patients. Again, we just sort of talk and we try to create a relaxed atmosphere, but are we talking about the right types of things? Are we making sure we're being careful in what we're saying? Employees snooping through patient files, lost or stolen devices and patient data, not restricting access to patient data, and hacking or IT incidents. We'll talk about some of the things you can do to help protect against some of those last things there, because a lot of this is cultural, but some of it is we need to get some technical security in place. What we see is these violations often come from sort of our culture, but also from some of the things that we do and how we handle data from an IT perspective. So activities like not backing up files appropriately. We have a backup if we lose the data, or if we fall back victim to something like ransomware. We don't have the backups, so we're not going to be able to retrieve that data and have that on hand. Not encrypting data, making sure that if we're passing data along to somebody else, or if we are transmitting information between one office and another, that we're encrypting that data. And that next bullet point really speaks to that. And emailing without encryption. A lot of people don't realize that email is not a secure method of transmitting data. That once that data leaves your computer or your network, it gets out of the internet, it's clear text, and somebody could intercept that and could pull right off and utilize that. So that would be considered a data breach. Having an open Wi-Fi network. So make sure that your customers or your patients aren't using the same Wi-Fi network that they're using for business. You're separating those two networks. Otherwise, they could see your data is being transmitted across your network. And then team members not trained on HIPAA and security. Make sure we've got the appropriate awareness and training procedures in place. At Eide Bailly, we've got a cybersecurity team that helps implement a lot of these type of security controls and put in place the training. But we also have an incident response team that's come in and helped organizations who've experienced a data breach. And what we've really worked together in developing our cybersecurity strategy, because we want to know, well, those companies or those offices that were breached, what could they have done better? What could they have done so that they wouldn't have gotten breached? So working with our incident response team, we've developed what we call our foundational security 7. So these are the 7 foundational security principles that any organization needs to put in place. If I go and talk to a state government, these are the 7 things I'm going to point to them are critical. But if I go and talk to a small mom and pop shop or a small practice, these 7 things are still applicable to your organizations. And so these 7 fundamental security are practices that every organization should have in place that really address cybersecurity risks. So things like locking down administrative access. We give everybody administrative access too many times, and people who don't need that information. We need to implement a principle called least privilege, which means you only give people access for the things they need for their jobs and nothing more. So making sure we're locking down administrative access to our systems. Data backup and recovery. It's become a much more elevated issue in the recent world of ransomware. If you're familiar with ransomware, it's where a hacker sends some malware, and when it gets deployed on your network, it encrypts everything that it can find. And the only way you can unencrypt that is if you have the key, the digital key, and the hacker has the key. So they hold you at ransom, and basically they're not going to unencrypt your data until you give them payment or some type of compensation. So, but if you have backups of your data, well, then you don't have to pay the hacker, because you can just bring your backups in and override all the encrypted data they put out there. Endpoint security is the idea that a lot of breaches are happening on workstations or on an individual computer. And so we need to put in the software to secure those individual workstations and computers. Email gateway security looks at all your email coming in and out of your environment. So much of security now is based on a hacker sending an email and trying to get an employee or somebody to click on a link. And so if we can put in email gateway security, we can cut out a lot of the things that might get through, a lot of those security or malicious emails that might be coming through. And number 5 is email phishing exercises. Because people are the biggest weak link, hackers are going after that. They are trying to get people to click on links. And in your practices, the individuals need to understand what these phishing emails might look like. And so performing email phishing exercises so they recognize sort of the telltale signs of a malicious email or a spear phishing attack, those are going to be important. Having a firewall with security services. Too often we see smaller organizations going down to Best Buy and finding a firewall and bringing it in and installing it, or having a service provider who gave them an email or a firewall that is not up to grade with the security they need. It needs to have the appropriate security services on it. It can save your organization from a lot of heartache. So making sure you have a firewall on your network with security services. And the last one is one thing we call multi-factor authentication. And this is the idea that, and some of you might have seen this, the idea behind multi-factor authentication is there's more than one thing that's validating who you are, who I am if I'm going to log in a system. It's not just that I have a password. I have a password and I've got a PIN number. I've got a password and I've got an email that's sent to my cell phone that gives me a PIN so I can log on. Maybe it's a thumbprint recognition or a facial recognition. We're seeing more of that. But two things that identify a user. And what that does is it greatly reduces the risk of a hacker being able to get on your network, because they've got to have those two pieces of information. They might have a password, they might be able to guess a password or break a password, but it's really hard for them to break a password and get access to your cell phone or get your fingerprint scanned. So in implementing multi-factor authentication reduces your chance of a breach by upwards of 90 to 95%. So these foundational security principles, they are the first step that we'll go and help an organization do. And we offer a free cybersecurity risk assessment that will evaluate your organization against key cybersecurity practices, and we will help you identify areas for improvement and give you a path to implementing some of these things and other things that might be applicable to your organization to help reduce your risk. So I think we've got another polling question here. All right, true or false? There are 7 foundational security principles that constitute the first phase of Eide Bailly's best practice approach to cybersecurity. All right, so this is true or false? Go ahead and put your answers in there, and we'll see how it goes. All right, should we see the results here?
Yes, we're going to close this poll and hear the results.
Nice job. That's correct. There's 7 principles, and those 7 principles are applicable to any organization. And there's things that you should every practice and every organization should consider when they're looking at their own cybersecurity best practices and how they're doing these things. So if there's anything we can do to help with cybersecurity, or if you're interested in a free analysis of your cybersecurity culture, please let us know. All right, we're going to transition now and talk about business valuation.
All right. Hello, everyone. As Shane said at the beginning of the presentation, my name is Kristen Taith, and I'm a manager in the valuation group of Eide Bailly. I focus on valuations for compliance and for transactions, and also valuations in the healthcare industry. So that includes those in the dental community. In the last few years, we have been involved in numerous transactions within the dental community, as those dentists looking to retire sell their practices, and then those dentists that are just out of school or ready to leave an associate position and become an owner as they look into purchasing practices. So even today, we're going to discuss valuation methods and current trends. So even if you aren't looking to buy or sell your practice right now, hopefully this section of the presentation will help you understand value and the transaction process. All right, let me just quick see. There it is. So we're going to go over 4 topics today. The first one is transaction trends. What is happening in the dental community relating to practice sales? Second, the purpose of evaluation, valuation approaches, and then some nuances of a transaction. So transaction trends is where we'll start. Multiples in general dentistry have remained within kind of a guideline of 50 to 70% of revenue for a number of years now. What do multiples really mean, though? They can only apply so much as an indication of value until you do further due diligence or a further look at what the company you're buying or selling, what's underlying what's behind the revenue. For example, a 65% of revenue multiple cannot be applied to both a practice with strong earnings and one that's barely scraping by. This 50 to 70% rule of thumb can provide a potential buyer or a seller with a range or something to just have in the back of their mind, but that rule of thumb shouldn't be used to determine an actual value for transaction. In addition to traditional sales of practices to a single provider, we are seeing practices that are merging together in order to share in the costs of certain resources. And we're also seeing larger groups picking up a higher percentage of the marketplace. So we have national players that are coming in to grab market share in certain regions. I'm from the Fargo area, and we aren't really seeing that so much there yet, but there's other areas, southern or on the East Coast, that are seeing the national players really coming in and aggressively buying practices. We're also seeing more dental management organizations where the dentist does just become an employee of this bigger organization. So they're no longer in charge of a lot of the decision making. And when it comes to a national player or a dental management organization, they may result in greater multiples. If you're selling a business and you decide to sell to a national player or an organization, a dental management one, you may get a better multiple. However, they may also ask you to take an earnout instead of cash at the closing of the sale. So there might be other things that come into play there. An earnout is where part of the proceeds of the sale are paid out over a set period of time. And the amount of the amount of future payments is really based on the business achieving certain financial goals. For a lot of people, it's not ideal. When you're selling a business, you typically want cash at close. You want to get your money and you want to get out. You don't want to have to rely on the new owner having success in future years, because you don't want to be responsible or, be shortcut if things don't go well. In some industries, earnouts are very common. In certain industries, banks aren't willing to finance the goodwill of a transaction, and so then that has to be seller financing or an earnout. However, within the dental community and dental transactions, we are seeing that banks are more willing to finance a greater to 100% of the purchase price. And this is because there's a really small risk of failure in the dental community. It does happen, but it just has a lower failure rate in dental offices than in other industries. If you are being asked to take an earnout, typically it's the last resort for somebody who's selling the practice. It's not really ideal. For a buyer, it's great. So not to say that they shouldn't offer to do one, but for a seller, if it is necessary in order to get a deal done, the earnout can really bridge the gap between what you want to be paid and what the buyer is willing to pay. So we do see it happen. And then if that is the case, the seller could try for the earnout and have it be based on their actual production as opposed to dollars being collected. That way they are responsible if they're staying on. They're responsible for that production as opposed to if it's based on collections. That might be the policies of the new owner, and they might not be able to do anything there to improve that. All right, so what is the purpose of evaluation? There's a lot of reasons to get evaluation. The first is in a transaction. If you're buying a practice or if you're selling a practice, using a straight rule of thumb may not be fair for either party. A seller may get a price that is less than that practice is actually worth, and a buyer has the risk of overpaying and not being able to meet their debt obligations with the current cash flow stream. Valuations can also be used in litigation and for strategic planning. We see some clients who come in and they want to know what their business is worth right now, and then we help to identify ways to enhance that value over the next few years. This is often before a transaction, so this is part of the planning before a transaction, where they say, what things do I need to do to identify the most value or to get the most value that is showing for a potential buyer? There are three approaches to determine value. The first is the income approach, a market approach, and then the asset approach. None of these just apply a straight multiple to the revenue or the earnings based on a rule of thumb. Instead, in valuation theory, we consider those multiples to kind of be the outputs. We don't use them to identify the value. Instead, it's something we consider at the very end as a check of reasonableness. Does this make sense with this industry, with this company? The income approach looks at the underlying earnings of the business. So you can either look at historical earnings or projected earnings. Projected earnings are typically used when operations are going to change in a way that the past is no longer a relevant look at the performance of the entity. Historical earnings are more common to look at. Not every business has a solid projection. Historical earnings really focus on the idea of, oh, I am getting very ahead. Sorry about that, guys. Historical earnings and projected earnings, we look at those earnings to identify any adjustments that need to be made to identify what's the normalized look at earnings. So should we be adjusting compensation? Should we be adjusting rent paid to a related party? Those types of things. And then to that, we evaluate risk and apply a risk rate to determine value. In the market approach, we focus on actual transactions and the implied multiples of those transactions. So we'll develop a population of businesses that have actually transacted that are comparable to the one that is being bought or sold. And then we use that information to help develop a value. We have access to both private company transactions and public trading multiples. Typically, though, private transactions are a better fit. Given the transactions, those are typically where 100% of the business is being sold, unlike when you're looking at share prices for a publicly traded company. Those are often much larger, and it's just a smaller interest versus 100% of the business. The asset approach looks at the underlying fair market value of the assets. We'll identify the fair market value of things that may not be properly presented on the balance sheet. For example, accounts receivable on your balance sheet may include some accounts that are years old that just haven't been written off to date. We would want to go through that and see what of this amount is actually going to be collected. What is actually a fair amount to consider collectible based on historical collection policies. And then we also remove the impact of bonus or accelerated depreciation from fixed assets. I mean, we've all utilized tax strategies that include full depreciation in 1 year. So on your balance sheet, it might show that a certain asset has no value, but in real life, that's not the case. So we would be looking to make those types of adjustments. The other thing that we look for is off-balance sheet assets and liabilities. So that sounds a little strange, but really an off-balance sheet asset is something like your workforce, where if on your balance sheet it doesn't show up. However, in a sale, if you're looking at the underlying collection of assets, your workforce has a ton of value. These are people that are already trained, and they are people that you've recruited, you've interviewed, you've got them in their jobs. And if somebody were to just start a practice right next door, they would incur a ton of costs trying to get to the same place you're already at. And then we also try and identify any non-operating items. And for a practice, we typically see that as being something like a car that is on the balance sheet of the business, but in a sale, it wouldn't be actually a part of the business. So there's a lot of factors that impact value. And in our work, we would try to dig out the narrative surrounding the financial statements and get an understanding of these things to determine how they impact the overall value of the company. So profitability, the patient demographics, technology, the service or procedure mix, the location. There's a lot of things there that can impact value. So the key with a transaction is really successful planning. You don't want to find yourself in a situation where you just have to accept whatever offer and whatever terms are thrown at you because it's time to get out. Careful consideration of the transaction price and the transaction structure and the tax consequences. A lot of people don't realize that there is a lot of tax impact on that cash that you get out of a deal. So even if the purchase price is one thing, the cash to the seller might be completely different. There's also operational considerations. For example, how long should a provider stay on? Those types of things just really need to be planned. If you're a selling dentist, how long should you stay on after a transaction occurs? We've seen sellers who leave the practice right away post-transaction, and then we have others that stay on under an employment agreement for a while to help with the transition for patients. Staying could maybe cause confusions for patients, as their preference may just be to stay with the person they've always been going to, but you can utilize the front desk staff and different employees to bridge that gap. And also the dental community has something going for it where they see their patients for the most part more frequently than other industries, which means that if you have a provider who's staying on 1 year, that patient may be in twice in that year for their cleanings, and you can kind of coach them on the fact that like, oh yep, this is my last time seeing you. Next time around, you're going to be with this new provider. So transaction pricing, here's some nuances in transaction pricing. Normalized EBITDA, what does that mean if you aren't somebody who loves accounting like the people on this call do? Well, EBITDA is a metric that we often use in the accounting world and instead of using like earnings or your taxable income, EBITDA takes out the impact of certain financial decisions, like what you invest in fixed assets and if you're taking on interest-bearing debt. A seller is going to advocate for a high EBITDA. They're going to probably want to show all these upward adjustments that say like, oh yes, this is what my books show. However, if we add back this because it was just a, personal or it wasn't necessary, it wasn't part of operations, then that number increases a little bit. And the reason that the seller is going to want to advocate for a higher EBITDA is because that's the number that typically a multiple is applied to. Working capital are the dollars that need to be left to fund the business after the transaction. So when you're selling a business, you might have a cash balance, and the idea would be, I'm going to distribute that out to myself before this transaction occurs, so that way the cash isn't part of the transaction. And that's just fine. That's very common. However, upon closing, there might be a working capital adjustment, which really just says a certain amount of working capital has to be left in the business, so that way on day one, we don't have to turn around as the buyer and take out a line of credit just to meet payroll obligations for the next week. In that situation, for working capital, the buyer's going to want a higher level, the seller's going to want a lower working capital. The payment type, sellers obviously are going to prefer cash at close. However, those seller notes, which is where they get paid over a period of time, and they typically are also getting interest, or the earnouts where they get paid a certain amount based on production, those can help bridge the gap between what the buyer wants to pay and what the seller wants to accept. So they do exist. There is a purpose for those things. Obviously, a seller, it's just not as great from the seller side to receive that. And then transaction pricing, something else that's related to that is transaction structure. Transactions can be structured as either a stock sale or an asset sale. A stock sale is where I have an entity and I am going to sell the entity, and the buyer is going to step into my shoes. They're going to have my assets. They're also going to take on my debt, which means that they are also responsible for any future liabilities that may come from work that I did. In this situation, it's often advantageous for the seller because of the tax consequences. The seller gets better tax treatment. An asset sale is where the buyer says, I am going to purchase specific assets from you, probably inventory, fixed assets, goodwill, and maybe a few other specific things for the business. This is typically what a buyer would like to see, because then the buyer gets to buy all those assets, put them on their tax return, and start depreciating them right away. Whereas in a stock sale, they have to step into the current depreciation schedule. An asset sale is a lot more common. Stock sales, they just don't happen in any industry quite as frequently. If you're going to buy 100% of the business, typically it will be through an asset sale. One of the things, but however, this transaction structure, it can affect purchase price, because if there are a lot more tax obligations for the seller by doing an asset sale versus a stock sale, that can be used in the negotiations. All right, so now we have our fourth polling question. What are the 3 valuation approaches?
All right, that last poll is now open. All right, we're going to go ahead and close this poll here. And here are the results.
The 3 valuation approaches are A, income, market, and asset. All right, so now we're going to turn it back over to Shane for some questions.
Yeah, thanks, Kristen. So do we have any questions from any of our attendees, Amy?
There's nothing in there right now.
Nothing yet. Okay. I've thought of a couple as I've kind of sat here and listened to this presentation, and I guess since Kristen was the last one to go, maybe we should start with her. But Kristen, how do things like patient demographics, service mix of what the dentist does impact the value when you're doing those valuations for sale?
That's a great question, Shane. So patient demographics are something that there is going to be a lot of discussion around. If you're an exiting, if you're an exiting dentist, you want to take a good look at what that patient demographic looks like. If the majority of your population of patients are older, then they may have a slightly lower value in a transaction. The question is, will the existing patient base begin to pass away shortly after the transaction occurs? Meaning the buyer is going to have to develop their own patient base anyways to stay in the same revenue stream. Although there is a lot more demand from older patients as they need more frequent and serious dental care as they age, it is something to consider. How long will these patients be around? Do I have enough younger families that will move into needing additional care? And then something else with patient demographics to consider is, what's the employment rate? If there is low unemployment, that might mean that more people in the area have dental insurance through their employers. And that can really play into what this looks like as well as to how valuable those patient demographics or how they play into the value. Another thing to consider along with the patients is the location of the business. Is the location still appropriate given the patient base? Has that local area changed? Is it no longer an area that's convenient to get to? Is it no longer an area that's desirable? That should definitely play into how you value a dentist. And the other question you asked about was the service mix. When you see a provider that has a more diversified procedures listing, it reduces the risk because then there's less of a need to refer to other practices for different procedures. Instead, they can do them in-house and they're getting revenue from a variety of different procedures instead of just solely relying on one thing.
Okay, that's a lot to take in. It's a lot of different points that you have to look at and to kind of come up with those valuations. It's not just an easy multiplier like you kind of mentioned at the beginning. So
yep, that's exactly right. And we talk to some sellers who are like, no, this is what I've heard, this is what my friend received, or I've heard rumors that this is the multiple, but it's not always the case. Like I said, profitability plays into it. Some of those really specific questions about your practice, there's a lot of things that help ensure that you're getting a fair market value for your practice, for what you've built, and also so that the buyer is getting paying an appropriate price for what they're taking on.
Okay. Well, thanks, Kristen. Anything come in yet, Amy?
No. Oh, actually, one question here. Let's see. How much of the accounting process would you recommend be outsourced?
So that sounds like it should be something from Jenny, and it sounds like she's still on here. And
I am. So that's a great question, and I think it will depend on a case-by-case basis of the talent and the availability within your practice. I think it's most successful when you do have someone owning some parts of the roles, and we would generally see where the billing, the revenue side of the practice is still either handled in-house or most likely outsourced to medical billing professionals. That's generally the case. And then to complement the cash disbursements and other bookkeeping accounting activities, we usually see an individual who is the liaison to an outsourced team. So they will help find information, collect invoices as they come in, make inquiries, get information to that outsourced party, but generally not own the responsibility for any of the accounting. That allows really clear lines of ownership and responsibility between the two. So ideally, it would be that there's some boots on the ground to help with some data, some information, but essentially all of that is outsourced so that it's all done collectively. It helps ensure the timing and accuracy, the turnaround of the information to know it's all held within one group and one part might not be waiting on another for certain pieces of information or to do their part so another piece can happen. It's usually improved if we can segregate those entirely.
okay. And Jenny, I have kind of another question for you. That is there a benefit to having us do multiple, like outsourcing multiple things? I know one of the services that our business outsourcing strategy does is payroll. And
Mhm.
I had a potential person ask me, why should I have you do payroll while also doing bookkeeping, while also doing tax work? What's kind of the strategy there of having those in one place as opposed to possibly 3 different vendors?
I think the holistic look at everything is the major benefit. And some of it ties into when we talk benchmarks and results, which also ties into Kristen's presentation on if there's a transaction or determining valuation. Those benchmarks and results are critical to that. But if you have someone, if all of those parties are better connected, they're all working towards the same goal. The same would be the case on payroll, where now we're not just ensuring that payroll is getting made, but what departments are all those employees with, and are we placing the expenses into the appropriate categories so that when we look at results and benchmarks, we know that the costs are lined up with the revenue, and that we can make determinations about those results and actually compare them to industry benchmarks and feel good that we're working with a good set of data. It also allows us situations, the working capital example about having enough cash to meet payroll. When those two parties are connected, they have the same goal of assuring that we can cash flow the next payroll. When they're disaggregated, there might be disruptions between the two because each one has their own piece of responsibility, but who really owns the whole when it all pulls together?
Okay, yeah, that makes sense to me. And then I had a just kind of a question for Lori. If we don't have any other questions up, Amy, doesn't look like we do yet.
Nope, not right now.
Lori, I've seen this come up in a practice before where you have this staff that's been with you for a long time, and because of the length of service that they've given you, their salary seems to be way out of the range of what someone you could either replace them with or someone you could or if they left, you've got so much responsibility that you've given them over the years. How do you work with dental offices or healthcare offices to help them out in that kind of weird relationship where they want to keep the staff, they want to keep them compensated, but their salary is maybe ballooned into something that is just unmanageable?
Sure, and anytime you're creating a work environment that people want to be part of, you're going to run into that issue. What we advise our clients to do when we're working in the area of compensation is we do take a look at the position that the individual is performing. And as I mentioned, it's not just based on a job title. It can be based on job responsibilities in case that person happens to wear many hats. And the ranges that we come up with are at the 25th, 50th, and 75th percentiles. And most organizations or practices will pay at the 50th percentile. And that means that 50% of competitors pay better, 50% pay less than what they're offering. And if you have a practice where you're giving good benefits, there's work flexibility, people have home work-life balance, and you're offering benefits, then you traditionally will pay around that 50th percentile. Somebody who has been with the organization or the practice for a very long time will be more in that 75th percentile. And if they are eking out of the 75th or even over the 100th percentile, then you sit down with the employee and you have a conversation with them. And so we provide some talking points to explain to the employee, hey, you are valued. You are valued to the point where you are actually at the highest level of the range. And unless we're able to come up with different job responsibilities within the organization, this is where your standard base pay is going to remain. They can then come up with different incentive programs for the employee where perhaps they're giving them a bonus, and the bonus could be based on profitability or other factors that they might come up with. So they're valuing the employee, they're paying the employee for the job that they're performing, but then they're also adding some additional incentives because of that job longevity and that wealth of experience and knowledge that the employee may have with them. So there's a couple of different things that we can advise them on, but traditionally educating employees on pay ranges so that they understand where they fall in that pay range and why they fall in that pay range where they do especially if they're at the upper end of it, it's just facilitating the conversation so the employee has an understanding. You cannot pay a receptionist $75 an hour just because they've been there for a long time. That just doesn't make any business sense whatsoever. So, getting them back down to where they should be paid, whether that's, $15 an hour, $18 an hour, $22 an hour, to do that job, and explaining it that way to them can oftentimes be all that's necessary.
Okay. And Kristen, if you're still on, have you seen issues when valuations where you've seen this employees being paid not unreasonable wages, but just large wages affect the value or the potential buyer coming into a dental practice? Have you seen that, or has that happened? Or
Yeah, that has happened. So part of the valuation process is to look at this as if it's the fair market value of this entity. So if I am the provider or the dentist owning the practice and I choose to pay my receptionist $75 an hour, it isn't great business sense maybe. And in a transaction, we would look at that from the point of view of what would the cost to this individual be to replace their role at a market level of compensation? Because the understanding would be there must be some sort of personal relationship or personal reason why this is happening, and under new ownership, that's unlikely to continue. And because of that, there would be, additional earnings that should be brought to the bottom line and considered in the transaction.
okay.
So that would be part of normalizing compensation and making sure that it does fit. We also see it the other way, where dentists don't pay themselves enough because they get those distributions at the end of the month, or at the end of the year, to make themselves whole.
Yeah.
And so that's something that we have to consider as well, is the idea of like, okay, not everybody is in a situation where that's sufficient. Instead, a lot of people do need to receive for this work, they need to receive compensation. They need to receive a return on their production. So do the revenues support paying a dentist for the full-time job at a market level of compensation?
Okay. Well, and Anders, we didn't forget about you. You might be our last question here, unless another questions come in.
Nothing at this time.
Okay. But Anders, I see a lot more mobile phones in the workplace, even at your dental offices. And what is some strategies that you've given to these dentists or healthcare providers to kind of limit maybe some exposure? Or, I get texts from my dentist, I think, and maybe it comes from a computer and I don't know, but it appears that it comes from the office manager. But what are some strategies or things that I can do to protect myself from possibly HIPAA violations or data breaches, just kind of based around mobile phone usage?
Yeah, a lot of that mobile phone usage that we see practices using, a lot of it's automated, and you've got systems you're going to be plugged into that automatically generate those emails. So just making sure you're not taking whatever default messages they're throwing out there, making sure you know what is being released and what's being thrown out there. For the most part, I think we see sort of the minimum information you need to convey to a patient to remind them of a particular event or upcoming appointment. But making sure you're not just sort of taking for face value whatever that third party feels like is a standard form letter. Mobile devices are a challenge for a lot of organizations. You've got employees that want to use them to check emails. You see a lot more dental practices that are utilizing tablets or mobile devices to when they're meeting with the patient to record data. So I think just looking for ways to secure those mobile devices, making sure you've got if you're not familiar with mobile device management systems, there's systems that'll help secure those to make sure that if a device gets lost, you can wipe that data remotely, so it won't be a violation. So just making sure that as far as the information that's going out to your customers, make sure you know what that information is, and you kind of reviewed that on a regular basis to make sure that it's not in violation. And then also looking for some technical solutions, and not just trusting that people are going to secure their phones, but if they've got your practice data on their phones, if they've got customer data on phones or mobile devices, whether that's yours or your practice's mobile device, making sure that you're locking those down with the appropriate security software. And if you have questions on that, let me know, because we've got some suggestions. I can point you in the right directions for some good solutions.
And what are some HIPAA? You mentioned HIPAA a lot in your presentation. What are some ways? I mean, I know that as a business working with healthcare clinics, dental practices, I should have a, I'm not even sure what the proper terminology is, but it's a HIPAA release form saying that as a dental practice, you know that I might be looking at some of that data. Is there software out there? Do you guys help with that HIPAA, like keeping track of who should be signing HIPAA forms?
Our group doesn't in particular, but we have a healthcare practice that can help guide in specifically the HIPAA forms that should be in place. And a lot of it's just making sure that you're covering the risks that are commensurate with your organization. While you're not a large hospital, so you can't have the whole infrastructure for tracking all this data, but you are held to the same standards. So you've got to find the solution that's going to work for your organization and reduce your risk as best as you can. So if you've got questions around the lines of, do we have the right forms? Are the forms going to adequately protecting our risk? Please don't hesitate to reach out, because if I can't answer your question, we've got the people who can.
Okay, great. Any other questions that have come up, Amy? I don't know if I know we've got 8 minutes left.
Nope, there is nothing that has come through. So,
well, I'd just like to thank everybody for their time that's been in attendance, for enjoying our webinar. I don't know if I introduced myself at the beginning, but my name is Shane Pickett. I'm a senior manager here at Eide Bailey, and I specialize in healthcare. We had Jenny, Lori, Kristen, and Anders on the phone with us, presenting their topics. And we just like to say thank you for giving us your time. And if you have any other questions, our contact information is there can be there on the screen. If Amy can see, there you go. And feel free to reach out to us if you have questions or comments or concerns that you would like us to maybe discuss with your practice. And other than that, we just thank you for your time.
yes, thank you all so much for attending, and thank you to our presenters, and everyone have a great rest of your Friday.
Thank you. Bye.
Thank you.